The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 23rd, magical Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with an empowering belief or two. My favorite. It's become your own electrician, the electrician of your beliefs. You know, beliefs, they have the power to create and the power to destroy. You and we have that awesome ability to take any experience of our lives and create a meaning that either disempowers us or one that can literally save our lives and empower us to places we never even dreamed of. Think about it like this. There's only one thing that you can control in life, and that's the meaning that you give to something. That's the beauty of the markets we trade. We've got bulls. We've got bears. A lot fewer bears these days, but we've got them out there. Folks, one that sees an event as a selling opportunity, one as a buying opportunity. Your beliefs, the meaning that you give to those events, those statements, criticisms, whatever comes your way, you are the one in control of that meaning. Now, really, when you think about it, it's a pretty cool, awesome power. Why? Well, because what you and I can do, what we can or cannot do, what we consider possible or even impossible, it's rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And that matters because all personal breakthroughs begin with a change in beliefs. It's as simple as that, folks. And how do we change? Well, I found the most effective way to change is to get our brain to associate massive pain with that old disempowering belief. We must believe at our deepest level that disempowering belief has cost us in our past. It'll continue to cost us in the present and ultimately will only bring about pain in the future. This is what's called the Charles Dickens process. You may have even seen it this weekend while you're watching television. You know, folks, sometimes knowing what we don't want is just as important as knowing what we do want. In fact, I think both are key because once you get rid of a disempowering belief, you've got to replace it. And I say replace it with an empowering belief, one that you can associate tremendous pleasure to the idea of adopting. And lastly, you and we must know that at any moment, I mean any moment, a decision that we can make can and will change the course of our life forever. It could be the very next person you stand in line behind. Could be somebody you sit next to on an airplane. Maybe it's the next phone call you make. How about one that you receive? The very next movie you see, book you read, page you turn. Might even be the next newsletter that you subscribe to. Any of these could be the one single thing that causes the floodgates to open. And then, here's the beauty, folks. All of the things that you've been waiting for will fall into place. That's a beautiful thing. Folks, right now we've got the Dow. It's trading up 67 points. S&P is up 7. It's trading at 1826. Composite up 2790. Russell 2000 up 6 points. It's trading at 1152. Apple on the move this morning. That's up 3%, up $16 and change. Google's up $10. Cisco up a quarter. Leading the charge, the upside, United Therapeutics. That's up 22%, up $20. Then Apple, then Google, then Netflix. Boy, the Qs have got to be on fire here. They had some big volume. Everybody had volume last week. Weekly, daily, you name it. Higher prices are here to come in the next 4 or 5 trading sessions at least. To the downside, you've got Steiner Leisure, STNR. That's trading off 17% here this morning. Not sure what is behind the move. We'll take a look at that stock chart. Tesaro, not Tesoro, Tesaro, TSRO. That's trading down 20%. Price line is off $6. No big deal out there. Chipotle, Mexican Grill, that's trading off $5, less than 1%. Michael Kors off $3.80. Sherwin-Williams, that's down $2.50. McKesson Corp off $2.50. Biogen off $2.50. A lot of $2.50s out there. Our call-in number, though, it's not $2.50. It's 877-927-6648, not 50. 6648. Give us a call. Would be happy to take a look at your stock chart. Let's go start off by taking a look at the S&P 500. S&P 500, there is no resistance inside. This is the daily chart we're looking at. If you are watching us on Tiger TV, if you're listening on your radio or your mobile device at TFNN.mobi, thank you. Thank you for doing that. Remember, you can catch the live stream of the show on a smartphone, pad, any kind of pad out there, except for one of those yellow pads. Just go to the homepage of TFNN.com. Over on the right-hand side, you'll see a button, 3 little smartphone devices. Click on it. This show will stream live to you, and you'll be taking a look at the S&P 500 chart. You'll see a blue line out here. That's our zigzag. That's our lightning bolt line, and lightning is going to strike. Now, 1835 is your 1-to-1 A to B equals C. That's starting off with a swing point back in the early part of November, out at about 1746 and change. That's your A point of the A to B equals C. Your B point is on November 29th. Makes that retracement into last Sunday out here. No, I'm sorry. This actually takes a look at the retracement down into December 18th. That was Wednesday out there. A little bit different if we take a look at the ES Mini because it actually made a C point, made a nice Gartley buy pattern on the, but that's just simply because the difference between the futures contracts and the S&P cash. And I do recommend, folks, that you get access to the futures contracts. You don't have to trade them, but you want to be able to fill that void of time when you've got the market trading to give you a better idea of where things are headed to. 1835, 50. We'll use 50. That's the 1-to-1. But will price stop there? Absolutely not. It's going to head up to probably 1853. Your 1 to 1.272, A to B equals CD. This move here is just simply too explosive. We're going to have some light trading here for the next 5.5 trading sessions. Tomorrow we've got a half a day. Markets closed, I think, around 1:30, if I'm not mistaken. We are open for a full day, the day after Christmas, so we're open on Thursday. The markets are open on Friday out there, although that's going to be some light volume, and then we're going to be open Monday and Tuesday, so New Year's Eve is an entire day's worth of trading out there. Not a lot of rest. We'll see if these markets here are going to rest, but the S&P 500, 1835, but it wants to move beyond that. Let's go take a look at the Dow here. The Dow has been on fire. It's up 65 points right now. It's 1-to-1, A to B equals C. And that's coming off the swing point from November 5th as well. That low, 15,522. That's your A point. Your B point out here is November 29th. That's out at 16,174. No resistance. No longer is there any kind of resistance, and I'm referring to candlestick reversal patterns out here. Does not exist. In fact, old resistance, in essence, becomes new support out here, but that's for another day, another time. We don't need to look at that at the moment. The C point is the pullback into December the 12th. That's at a low of 15,703. It's 1-to-1. A to B equals CD, 16,354. Will that stop there? Absolutely not. It's on its way to 16,530, 16,600. We know the Dow had been trading in a sideways consolidation. It's broken that consolidation. That was a 1,000-point move. That's what's underway here. I think that takes us to about the 16.6 area inside of the Dow. Now, remember, those are measured moves, those consolidation patterns. They're beauties out there, and the move is equal to or greater than. But the 1-to-1, 16,350, 384, and at the moment shows no signs of that being its resting point. That's what's going on inside of the Dow. Let's take a look at the Russell 2000. Russell 2000, let's take a look at the daily chart out here. There is the monthly chart. Something is not right on my screen because it did show it was up 66 points or what have you. So we'll take a look at the IWM because this I even said it earlier. That's not right. The Russell's up 7 points, so I've got some kind of bad tick or something out here. But probably no bad ticks inside of the NASDAQ composite. We take a look at the daily chart here on the NASDAQ composite. Let's take a look at its A to B equals CD. Let's go back all the way back to November 7th, and we'll use that as our A point. That's at a low of 38.55. Your B point, well, that was made not too long ago, December the 9th. That's at 4,081. Pulls back, only makes a 0.382 retracement here. Does that on December 18th. The NASDAQ composite, it wants to trade to 42.07. It's at 41.34. Quite frankly, the NASDAQ composite, it actually wants to trade higher than 42.07. 42.68 is more likely the number where it wants to trade up to. What we can see here on the NASDAQ composite, it's certainly breaking through my rising price channel out here, but breaking above it just means that price is going in that direction. It's not a breakout. It's not anything to even be worried about. Yeah, it's a thing that you pay attention to, that maybe you're going to find a little bit of overhead resistance out here, but the reality is you got to go further back on the left-hand side of the chart. Now, what's interesting about the NASDAQ composite, I'm going to pull up this beauty chart here. This is the monthly chart for the NASDAQ. Now, I've mentioned this a few times. There is, if you're watching us on Tiger TV, and remember you can catch the archive of this show on Channel 10 out here, this chart here shows these little cycle dates that has worked ever since coming back into the time frame of about October of 2000. So you go, it's like an 11-month cycle that exists inside of the NASDAQ composite on the monthly chart. And about each 11 months or so, it forms a swing point high or low. Swing point high or low. Well, the next one, the last one that we had, folks, that came in April 30th, 2012. That means our next cycle here, and certainly if this is going to be a cycle low, man, things are going to fall out of bed in a big way. Not that it can't happen. Anything can happen. That's exactly why you use stops out here. But let's use the now. Let's stay in the present here, as opposed to trying to really predict the future. What I can say is this cycle pattern here, if this completes, looks to me like what it's going to do, it's going to create a cycle high out here. That cycle high doesn't take place until sometime in April, end of March of 2014. And right now, the NASDAQ composite, well, it's in that Basel-Chapman leg D, I believe, on the monthly chart out here. It's fourth leg, and and it's with a label of plus on it. That plus should take it up to about 4403, and 4400 is the target. 4400 is the actual consolidation pattern of the NASDAQ that takes you back to January of 2001. This was a breakout that lasted, this was a consolidation in essence that lasted for 11 years, a little over, maybe almost 12 years out here, and it is now going to complete that. It looks like it's going to complete that consolidation in, maybe about 14 months out here, something like that. That's assuming that April 30th, or April, sometime in April, I should say, because it's a monthly chart that we're looking at, end of March, April, that it hits the 4,400 level. That would equal your consolidation. So maybe that's where the markets really start to run into some kind of significant resistance. That's based on the way the charts are trading now. Let's take a look at the New York Stock Exchange. New York Stock Exchange, that gave us the green light a couple of days ago. I don't think I updated over the weekend the summation index, but I can tell you that it ticked up, that's for sure. And what the New York Stock Exchange is doing here today, it's taking out its highs from November 29th. Those highs were 10,229.57 or 10,238 out here. So the New York Stock Exchange, and today let's take a look at market breadth. Market breadth, you've got 1,500 net advancing issues. So you've got advancing issues outpacing declining issues by nearly 4-1. Right now, Dow's up 62 points. S&P's up 7.5. Give us a call, folks. Happy to take your call, answer your question about any stock, commodity, currency, future. We'll be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 65 right now. S&P is up 8 out here. And let's go check in on the ETF structures out here. Let's go take a look at those, and then we'll take a look at the Rose Momentum indicator trading strategy out there, give you an idea as to what's going on. Now, these are the weekly charts that I've got inside of the Qs out here. If you take a look at last week, the Qs, volume of 204 million shares, getting above resistance levels. The resistance was really the bearish engulfing from the week of December 13th. That high was 86.53. We closed out at 86.50, so you closed 3 pennies below it. Not a big deal out there because you were coming into it with major volume. You came into it with 204 million versus 154, but of course the daily chart, that shows you the picture. Now, I have shared this with folks many times. A few times. Let's call it at least a few times out. I don't know what I did there. I just deleted something accidentally. And nonetheless, you take a look at the low that came in on the trading session of December 18th. Now, here's where volume can be your friend. Remember, when you're taking a look at any kind of a stock chart or trading strategy or system out there, or any of the tools that you use, what's so important to remember is that the stock market, look, it's a living, breathing human organism, and it has characteristics. It has patterns. So when you're taking a look at different indicators, you want to make sure that you're not doubling up on the same indicator. For example, if you use the stochastic, and that works well for you, don't spend any time with the relative strength index, because they both measure, in essence, the same thing. They measure velocity, they measure momentum, they measure speed out there. So just simply get comfortable with one. Likewise, and so velocity or momentum is really just one aspect of a market. In some stocks, some ETFs, some indexes, momentum has a stronger weighting, a stronger meaning than the other three levels. One of those other three levels is volume. So volume is only one aspect of trading. And then the other two are liquidity, sometimes referred to as volatility, but certainly liquidity. And then you've got just simply the power, the angle, the energy out there, what some might call verticality. And there's different tools to measure each of those. Well, if we take a look here at, here's where you can use volume as your friend inside of the Qs. The Qs have a habit of when you see high volume lows, and that was what's interesting about the candle session that occurred on December 18th. Like, it doesn't matter whether it was how the market reacted, whether it was Uncle Ben, the Fed, Yellen, whatever it is. It does, because years from now, when you're looking back at this stock chart here, you're not going to know what event it is. It really doesn't matter what the event is. The important thing is to trade what you see. Well, here's the deal. When you see high volume lows inside of the Qs, those are actually reversal areas the majority of the time. So different in it's not does this is not you cannot use this in the SPYs. You cannot use this in the IWM. You cannot use this in the Dow Diamonds, but you can inside of the Qs. And that was really the beauty of that December 18th candle, because you had the market pushing down and pushing up with volume. It didn't really matter. It was telling you bullish. That was bullish because you had a high volume low and you were pushing into the highs out here. You can go back and take a look at the last time that the Qs were down and it cemented a nice little bottom out here. That was on November the 7th out there, 52 million shares. Take a look at the spike before that. That took place here on October the 9th. So oftentimes, now there are times when it fails. So, but the majority of times, folks, it institutes an initiation of a move higher, and that's what we see going on inside of the Qs. If you take a look at the A to B equals CD pattern inside of the Qs, you'd use this little doji in the window, my window. That's the December 9th swing point high. That's out at 86.53. Look, you're small. And I do mean small. Now let's use the proper one. Let's come back to November 7th. Let's come back to the low, 81.37. That's really your A point of your A to B equals CD up. We'll use that doji candle December 9th. That's your C point. And we'll use the low coming in last Wednesday at 84.05. So your 1-to-1, A to B equals CD. And the volume there on that doji on December 9th is 22 million shares. Hey, today you've already done 6 million shares on an off day. Where there's not going to be a ton of volume, and yet it's got some pretty good volume, at least with regard to the swing point. So you traded into the swing point on Friday with volume. Today it looks like you're going to take it out with volume. 1-to-1, A to B equals CD inside of the Qs, $89.25. Is that where it will stop? I don't think so. I think you're a little more looking like maybe about $90.65, and that is in the QQQ. Let's take a look here at the Russell 2000, the IWM. Let's take a look at it on a daily time frame. Looks like we're going to have to do that when we get back from this breakout here. The IWM, which had completed an A to B equals CD down. Now what it's doing is it's making an A to B equals CD up. That price projection on it, the 1-to-1, takes you to 116.31, but 118.23 looks to be the next stop on the train for the IWM. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 65 right now. S&P is up 8. What I've got on my screen here, I've got a chart of the S&P 500 is the weekly chart. Hopefully you're watching along on Tiger TV. Again, if you're listening on the radio, your mobile device at TFNN.mobi, we appreciate that. Archive of this show is on Channel 10. You want to go and watch the archive of this show today and take a look at this segment here specifically. We're taking a look at the S&P 500, the weekly chart. This has got my Rhodes Momentum Indicator on it. And what we're taking a look at, you'll see, depending on your screen out there, you'll see some different colors. You'll see a purplish color. That's just a little dark color. That's coming back in. That's it. And what you want to do is just go look at November 16th, 2012, the week of November 16th, 2012. Gave you a nice little buy signal that actually took place the week of November 23rd, 2012. Now, you'll see some lettering on my screen here. You'll see some red boxes. You'll see some red boxes. You'll see some green boxes out here. What the red boxes tell you is they tell you buying pressure. They tell you that, in fact, we have not seen a green box on a weekly chart since the week of November 16th. That means, now this is obviously no news to you because anybody can, anybody can tell you that. Well, you got to go back and in this case here, nothing but buyers in control of this market. Now, why is that important? Because from a trending-based system, if you take a look at this, this says stood the test of time. If we come all the way back here to the 2007 time frame here, what you'll start to see is you'll see nothing but green boxes. This system here, from a momentum trading strategy standpoint, would have had you out of the market December 28, 2007. And that's the S&P was at about the 1481 level. It would have had you out in cash. Now, this is helpful to you who've got the long-term holdings out there, which is basically 70% of the audience that's listening in. Is that your holdings, you're making some check boxes in mutual funds or what have you, and you want to know, should you be in, should you be out? It's longer-term holdings out there, and I suggest that you manage it as longer-term holdings. That's why I've got the weekly chart on the screen here. This will help you. And many of you can't go short, but you can be in cash. And so this would have gotten you out back at the December. It wouldn't have gotten you out at October of 2007. That's not what this system is all about. That's what utilizing some other signals, which would be your leading indicator signals, patterns, A to B equals CD, expansions, meaning butterfly patterns, things of that sort, along with a Japanese candlestick charting out here. Nonetheless, from a weekly standpoint, this had you out. You would have been out. You would never have gotten back in, not until you would not have come back in March of 2009, but you got that nice signal on the weekly chart to come back in May 1st of 2009. With that, actually, you would have gotten the signal to come back in. I take it back. March 27th, 2009 was actually your signal. And then you saw the bulls starting to take charge because we started to see these little red boxes forming. Of course, we can take this back even further. We can come back and take a look at price moves off in 2006 out here. Hopefully you're watching on Tiger TV. Now, the reason why I'm showing you this is because you can get access to these types of charts. And you want to do it now. You certainly want to experience this. You want to be educated on this. Just go to the homepage at TFNN.com. Sign up for Mastering Probability. It comes with a 30-day unconditional money-back guarantee. It means you got no risk. Now, you may have missed out on the opportunity last week where you were able to get it totally for free. That doesn't matter. If you pay for something, you'll actually pay attention, and that's the beauty out there. And so what you want to do is go to the homepage at TFNN.com, put your credit card down. You can get that deposit back in 30 days, but you want to be able to use this because, folks, what it also helps you do, and I can go back further. Let's go back further here. If we take a look at the different trends, take a look at this this move here off of the lows back in 2003 in March of 2003 out here. You actually got a nice little signal to come in right around October of 2012. Another signal to come into the market back here, March 21st, 2012. You can see all these little red boxes here telling you that you had buyers in control of the market. And why is that important? Because right now, look, the market you just have to go with what the market is doing right now. If we take a look at the weekly chart of the S&P 500, there is no resistance. That means the market has the freedom to run as high as it wants. It doesn't have any kind of downdraft that it has to get beyond, so there's no supply line out there. There's on the left-hand side of the chart. There's no reversal signal, meaning a candlestick pattern. The only reversal signal that came in here was this little bear, and I do mean little. When we take a look at the weekly chart, that's the bearish engulfing candle the week of December 6, 2013. Well, you're up above that, the high of that candle session out here. In fact, that should become support. So we're going to watch that session, the high, which is 1810.02 inside of the S&P 500. We'll see if that level acts as support. But right now, you're up above all kinds of resistance. That is on the weekly chart for the S&P 500. Now, there's another beauty tool that I've got that goes with this system. It's included inside the newsletter out here, and that is my little market analyzer. In fact, if we take a look at the market analyzer right now, that's what I'm popping up on my screen. You're taking a look at what, 3, 4, 5, 6, 7, 8, 9, 10 instruments. These are the top 10 holdings with inside of the XLF. The top 10 holdings with inside the XLF represent more than 50% of the weighting structure with inside it. Now, what's important about this is you really need to understand the trend on multiple trading time frames, and that's what this does. This takes a look at the monthly time frame, the weekly time frame, and the daily time frame out here. And this, folks, is on nothing but strong bullish moves out there inside of the marketplace. So the financial sector, it is on fire right now. It is firing on all cylinders. Let's go take a look at the XLF. Let's go see what it's actually doing. Let's go see if we can find a price projection out here. Take a look at the daily chart. Right now, the XLF is trading up above the swing point from November 29th that had 12 million shares. The The XLF, it came into it with 99 million shares. That's some volume, folks. That was on December 18th. The XLF is on its way to about the $22.25 area. Right now it's trading out at $21.71. Let's stay inside the sectors inside the S&P 500. Let's take a look at the energy sector, the XLE. Let's see what it is doing right now. It's trading out at $87.18, weaker than the XLF out here. Its swing point that it's trying to get up into is the November 22nd area, and that is at about $87.28, 7.5 million shares. It's traded into that low today. So far today, it's coming in with 2 million shares. Now, really, when you consider everything, that's not too bad for an hour and 10 minutes worth of trading inside of the XLE. Let's take a look at Exxon. Speaking of X's, let's take a look at ExxonMobil, because that is the number one weighting with inside of the energy sector, and ExxonMobil is on its way to $100. That was a $7 breakout session. Consolidation range out here. It broke out on the day of November 15th, came back and tested that area back on December the 2nd. It is off to the races. That top of the consolidation was about $94, we'll call it. So headed to about the 101 area. Had some fairly good volume back here on December 16th. Pretty decent volume as well on December 18th out here. So the ExxonMobil, which should help lift up the energy sector, the XLE, it is on its way up into that 101 type area. That's the minimum move, because remember, when you break a consolidation, your move is equal to or greater than the actual consolidation pattern out here. Let's go check in on some of our core stocks. Core stocks being stocks like IBM. We'll take a look at Apple as well. Google, if we take a look at Apple here, Apple up into the swing point from the trading session of December 5th. That has 16 million shares. You're up into it already with 7 million shares. It has not gotten over the high. That high would be 570, 514. I suspect that it will. It'll at least go test that high. If it gets up over it, that sets up your A to B equals CD, takes you to 599, maybe 615 or so. Let's go check into IBM. IBM here is running right into the resistance, so this is going to release some good information to us here over the next couple of trading sessions. IBM, if we take a look at IBM, you're going to take a look at a descending price channel that in essence has been traveling in ever since April 3rd. This is a daily chart that we're looking at on my screen right now. And if we look at the close of April 3rd out there, that close was 214.32 out here. And what I'm using is this next little cluster of opens and closes right around the September 19th, 2013 area. And that really becomes our resistance zone, the top of our descending price channel out here. As well, IBM had broken through the 181. I'm using 181.10. I don't know if that's really the number to use. I'm going to have to do some further analysis of that. That used to be old support. Well, we're going to leave that because it really did act as old support, and old support should become resistance. So we'll go ahead and we'll leave that. And that was the original breakout session that IBM had back on the trading day of January 20th out here. And that was the low or the high of that session is really what I've got marked, and that was at 188.97. So we'll see, since we've got price converging both diagonally and horizontally, we'll go ahead and leave that in there. But a breakout back above this descending price channel, and certainly that would take you above 181.10 inside IBM. That would be very, very bullish for the Dow, because it's the number one weighting inside there. And that would have said that the breakdown in IBM, albeit with volume, that would have said that the breakdown was a false breakout to the downside. So that's what IBM needs to do on the daily chart. On the weekly chart, it's probably already inside of the consolidation, because I would think on the weekly chart, you're looking at getting back in the consolidation probably right around the 177-ish range, and you're at 181.20 right now. So the weekly chart already giving you a signal that the breakout to the downside in IBM was a false breakout. That is very bullish for the Dow. If we take a look at J.P. Morgan out here, J.P. Morgan today trading above its swing point from November 25th. That had 18 million shares out there. You came into it Friday with 22 million shares. That was a bullish sign. Today you're up over it with 6 million shares. And again, only an hour of trading. So J.P. Morgan is setting up and confirming an A to B equals CD up that will take it to $64.09. Your 1-to-1 A to B equals CD takes you to 62.23 out here. But that is what JP Morgan is doing on its daily chart. And it looks like it's also maybe breaking a consolidation pattern out here. Let's take a look at a little longer time frame for JP Morgan. There's the weekly chart. The weekly chart here, how about this? The weekly chart had volume of 73 million shares on July 26, and it took it out with 102 million shares. So the weekly already confirmed an A to B equals CD up inside of JP Morgan. It did it the week of November 22nd, 2013, 60.52, but 63.51 is more likely the target for JP Morgan. Let's see what else we've got here in our core stocks to take a look at. We looked at ExxonMobil. Let's take a look at the General. Let's take a look at the General Electric out here. It is trying to take on its swing point high. Its swing point high being November 18th, 39 million shares up there. The price level is $27.50. Came into it with some nice volume. Came into it with 78 million shares on Friday out there. Boy, that's coming into a swing point with volume. Now it just needs to close above $27.50. If, in fact, the General can do that, it ought to move up to about $30.20. That'll be bullish. Now, not much of a weighting inside of the Dow out here, but General Motors is one of those stocks that helps to point the way for the Dow out there. So a nice little bellwether stock to look at. If we take a look at Intel, INTC, this is the weekly chart here for Intel. It wants to move up to the top of its rising price channel. That would take it up into about the $26 range. But let's take a look at a daily chart here for Intel. Let's see what it is doing out here. It's dealing with this little open, well, it's really closed that. So what you've got is it's trading into the June 4th swing point. That's got 68 million shares out there. Let's take a look at it. We're coming in on Friday with 55 million shares. So, but it's trading inside the low of that, which is 25.35. Says it wants to go test the 25.98 area. Let's go to Patty in Denver. Patty, thanks for calling. Thanks for holding. How are you this morning?
Okay, how are you?
Very good, thank you. You want to take a look at a stock, ticker symbol NGVC. Tell me what you're doing. Tell me about the stock and how I can help you.
I shop there a lot, and
okay.
It drives me crazy, so I haven't bitten yet, but it's really going like a rocket. And,
okay. And this is in the Denver area, obviously. Do they have stores elsewhere?
They're expanding. They recently, I think it was last year, they went public.
Okay.
And so I've been comparing them to Whole Foods and a bunch of others. And
okay.
In fact, this morning I just compared it to the Qs. Just
okay.
for the heck of it.
All right. So yeah, let's go take a look at this equity here, folks. The ticker symbol here that we're looking at is NGVC. Now, do you like this better than Whole Foods? Would you say is it a similar kind of a touchy-feely whole paycheck? Well, is it good discounted prices or about the same?
It's cheaper prices than Whole Foods. It's discounted prices.
Okay.
It's much more basic, but
sure has a nice looking stock chart out here. You
right.
know,
I mean,
folks
I would have thought that Whole Foods would be beating the pants off of it, and it's not. But maybe just because this is fairly new and it's got, a lot of opportunity ahead of it as it's expanding.
Yeah, the grocery business, what a tough business to be in. They seem to work on pretty thin margins. But can you hold on through the break?
Sure.
All right. We're going to go back. We're going to take a look at, let's see, the name of this is Natural Grocers by Vitamin.
Right. I call it Vitamin Cottage, but they call it Natural Grocers Vitamin Cottage.
Got it. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 74 points right now. S&P is up 9. We're going back out to Denver to speak with Patty. We're taking a look at Natural Grocers. It's a retail chain that is out in the Denver area. Let me see if they do have some stores elsewhere around the country. It doesn't tell me. But we're taking a look at the stock chart now. Patty, here's what it's doing. And it's traveling in really, you've got both a horizontal consolidation range, about a 10-point move that it is traveling in, and then you've got this little rising price channel that it is also traveling within. Now, if it can break out of the consolidation pattern here, which it's really testing as we speak today, tomorrow, Wednesday, it's trading into the swing point here of September the 16th. That swing point high that you're looking at is 42.86. The low of that swing point is 41.28. It has 141,000 shares traded on that session. Now, today, you're already up into it with 25,000 shares. So math-wise, it's really not too bad considering, it's a holiday. But if it can't take out the high, meaning let it go try to test that 42.86 level, then what it should do is it should back off, and it should back off and probably hold this little rising price channel. And that would be the place where you would take a look at taking a stab at it. If it does not hold the price channel, then it will come down and probably come into the low out here. Your buy on this would be right around the November 22nd low, which is a high volume bar out there. And it's either going to be the high of that bar that probably holds it, okay, assuming that it can't break out of the consolidation, or the low. So you're looking at probably around the 34.47 to 38.70 area as being your entry point. That is assuming that it cannot break the consolidation. If it does break the consolidation, meaning a close above 42.78, this ought to move up to about the $52 level. If it can break that with volume, then you're looking at you could go ahead and enter right around that 42.78 range. So that's how I would be. That's how I would be paying attention to this and taking a look at it.
Thank you so much, Steve.
Hey, you bet. Have a Merry Christmas, Happy Holiday to you, and Happy New Year.
Too.
Absolutely.
Bye-bye.
So, you're welcome. So, folks, it is a Marvelous Monday. That means we've got our lineup. We got Mr. Basil Chapman. He's in the warm-up circle. He's getting ready to come on in and hit a nice double off the fences. He'll drive me from first base over to third, and then we got Larry Pesavento. He'll go ahead and drive us in. After that, we've got Darryl Martin, David White, and then a Tom O'Brien show from 4 to 6. What are we paying attention to today? Look, folks, these markets are going to trade higher for the next 4, 5.5 trading sessions out here. We've got confirmed A to B equals CDs on the way up. We've got everything is pointed in the right direction for the markets to move higher. Now, I'm not saying that they're not going to move higher after the beginning of the year as well, but right now the markets are poised to move higher. We've got the currency pair. We've got our favorite currency pair, the Euro-Japanese yen on the weekly chart. That wants higher price. That bodes well. Other than inside the NASDAQ, where we're hitting, the NASDAQ is hitting 52-week highs, more than 52-week highs, but we are doing it on less issues on the way up. That's the only real divergence that we've got inside the marketplace. But what you can expect here today, what you can expect through the end of the year is you can expect some higher prices out there. But just make sure you always keep your stops in place. I got nice market breadth today. Net advancing issues, 1524. If we take a look at the VIX index, that's below, or should be below the 50-day exponential moving average. It is. When it's below that 50-day exponential moving average, that too is bullish out there. So stay tuned for Basil Chapman. Have a marvelous Monday if you're traveling. Be safe out there. And I'll look forward to speaking with you again bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.